Okay, hello and welcome everyone. Welcome to JFD Brokers, Traders, Espresso with me, Darius and Anucauskas. Today's the 15th of January 2019, so welcome everyone, good morning. Welcome to this Tuesday's morning session where we're going to have a look at the markets, a few charts, the usual stuff. But before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay guys, so now then, first of all, of course, I would like to apologize for my voice a little bit today, so it's a bit on the cranky side. Hopefully I won't interrupt the video too much with my coughing. So okay, the first chart I wanted to quickly touch on is the FTSE MIB, so the Italian index. Overall, looking at this this index, we can see that it continues to trade lower below this downside medium-term resistance line taken from the highs of May last year, and of course, for now, as long as that line remains intact, we're still going to aim lower. But from the very short-term perspective, you can see that the index is now trading within this little range here between the 18,420 level and approximately on the upside the 19,630. So for now, this is of course what we're going to keep a close eye on. Of course, we're also going to keep a close eye on this little medium-term downside resistance line. Now, from the very short-term perspective, you can see that also the index continues kind of tries to travel higher, but recently got held near the 19,380 zone, so approximately there. So, of course, we're still probably going to aim a little bit higher here. We're still aiming for a retest of this downside resistance line, or even actually slightly above that. We do have this upper side of this range that the index is trading in that I mentioned right now, but of course, be very careful with this one. If it fails to kind of overcome these two areas here, then, well, I mean, this could be a perfect opportunity for the bears to step in again. So if, let's say, we see something like this, let me just actually put an arrow quickly for our future reference. So in a way, if we see something like this, if we see a travel higher and a test of this downside resistance line, or even the upper side of the range that I'm talking about, so we see that. But if it fails to drive higher, then we could see maybe, like I said, a rejection here and a push lower, and our confirmation here could be this break below the 19,220 zone, approximately there. And this way we could then target slightly lower levels, slightly other potential areas of support. Now you could in a way keep your eyes on this 18,850 level, or even actually we could in a way go all the way back down towards a retest of this lower side of the range, so which is around the 18,420 level that I've mentioned before. So keep your eyes on this one, guys. It's a very interesting index, certainly very interesting. It's close to some key important areas of resistance, but if actually this gets broken, if we see a break of this, not only in the downside resistance line, but also a break of this upper side of this channel that I'm talking range that I'm talking about, so certainly could in a way target slightly higher levels, and in a way this could increase the chances of this index traveling further up here, potentially aiming for the 20,250 level, and probably by the time it would it could, let's say, move here towards this area. If it wants to move that to this area, this level here could potentially already coincide with this 200 EMA, which also could be a good area to watch. So for now, guys, be very sharp, careful, and keep an eye on this little medium-term downside resistance line that has been running here since May last year, since the high of May, and of course the upper side of this range that the index is trading in. But like I said, if it fails to overcome this could be a good opportunity for the bears to step in again. Jumping into one commodity quickly, and that's silver. Now looking at this, so silver has stalled a little bit, and so now it's kind of stuck here between the 1550 and the 15.75 levels. So in a way, you could continue waiting here. Probably it's a bit of a difficult one to jump into this one yet, because for us, we'll continue monitoring these levels here, the 15.50 on the downside, and the approximately around the 15.75 on the upside. So a nice good pop above this could potentially increase the chances of this one traveling further up here towards the 16 level, which was last time tested. Excuse me, which was last time tested here back in July, on 12th of July 2018. So it could be a good potential area, but first we need to see this good nice pop above the 15.75 zone. On the downside, well, if this decides to drop below the 15.50 level, certainly we'll aim for the 15.25. Which also coincides here with this 200 EMA shown as the black line. So again, for now, guys, probably try to play it safe here. Keep your eyes on these two levels. If, let's say, you do decide to kind of enter something here, position something here, but again, don't forget to have your stop loss in place, because that's very important, because we could see something like this happening here, guys, where we could maybe have a break above the 15.75, but then a quick reversal back down like we had here. So that's why to have a nice good, maybe even actually a tight stop loss would be a good option here, just to be on the safe side. Jumping into one crypto that I really wanted to quickly show you guys, and for this one I'll jump back into the 4-hour chart. Now I was talking about this one in my Traders Tea Time yesterday, and I was telling you guys to keep a close eye on this area here around the 125 126 zone. So basically what we got here is, yesterday we had in the evening we had a nice pop here to the upside, and of course now this is where we're going to keep a close eye on, because it managed to get back above the 125.50 level. Now today it's trading above its pivot, so it's in a way a positive sign. So also some could say here, and some could see something like a flag forming. So in a way, if this is of course more of a bullish setup than a bearish, but of course always have this element of the doubt that this could suddenly reverse back down and travel further. So in a way, that's where we're going to keep a close eye on this 125.50 level. A nice good drop below this, and especially below the pivot, which is around the 125 level itself. So a nice good drop below this could then open the path back down towards the 118 level, or even actually going lower further down. But for now, judging by the picture that we're seeing here at this point in time, it seems to be more bullish than bearish. So you could in a way target the next potential area of resistance here near the 135 level, so just about $10 away from this pivot here. So keep your eyes on that one. Very interesting developments here in the crypto world. EURCAD, now this is a very interesting pair as well. Looking at this, of course, looking at this daily chart, you could in a way try to draw a few upside support lines here. So in a way, you could take this one, and this taken from the lows of the 24th of October, this very short-term upside support line, you could in a way have it on your chart. So for now, where we're going to focus more on is looking at the 4-hour chart. You can see that the pair is kind of coiling up here a little bit. So in a way, we could draw this little triangle here, this symmetrical triangle. So, and this is where we're going to keep on monitoring, because a nice good pop above either through the upper side of this triangle, or even actually a drop below the lower side. Now this is where we will probably it will become more interesting for us. So but for now, until it's kind of stuck here, yep, it is coiling up, it is getting squeezed. So keep on monitoring this one. So in a way, what you could keep keep on looking at is, let me just quickly mark these levels here, guys. So on the upper side, if we're going to get a nice pop through the upper side of this triangle here, keep a close eye on this 152.65 level. So just for better confirmation of possible upside move here, it also, you can see that it also coincides here with the R1. So a nice good pop above the above the upper side of this triangle could of course lead towards a test of the R1, which is around the 152.65, but this is where it could become more interesting for more bulls, because if this gets broken, this of course could clear the path towards the R2, or even actually going a little bit higher here towards the 153 zone, so approximately there. So you could in a way keep your eyes on that one, but from the more of a near-term perspective, if this continues to push further up here above the 153, let me just adjust a few of these levels here, guys. So if it continues to push higher here above the 153, even 153.05 to be more on the safe side, now this is where it could become interesting from the longer term perspective, because we could see this one maybe traveling further up here. But for now, of course, you can see that this 4-hour candle right now is pointing to the downside. It's trying to move below the pivot, which of course kind of raises concerns of about the possible upside here. But to be honest, this candle is not finished yet, so it has the same chance to, like I said, reversing back up here. But again, for now, of course, keep a close eye on this lower side of this triangle as well, because a nice good drop below this could drag it towards the S1, which is around the 151.85 zone, which, but a break below that could of course send this pair lower towards the next potential area of support, which could be around here near the 151.45 zone, approximately there, which is also not far from the S2. And to be honest, I mean, we, like as I mentioned before, we do have this upside support line that could in a way get tested as well if the selling momentum is strong here and we start breaking this 151.45. So that's why, guys, be very careful with this one. Keep on monitoring this this triangle, keep on monitoring this squeeze. Let's see how this plays out. Like I said, for now we're just gonna stay neutral on this one, but it does provide some good potential trading opportunities, maybe even today. Jumping into GBP Aussie quickly. Now this one, to be honest, let me just jump back into the daily on this one, so you can see it's a bit of a mess here. Certainly it did break this short-term tentative upside support line that was running here from the lows of the 12th of December. So now of course it found a good support near the 177.30. Of course it did have an undershoot here, but quickly reversed back up, and you can see that this 177.30 level kind of acts as a very nice area of support. Certainly got back above the 178.20, but to be honest, that level becomes now a bit of a tentative one. What we're going to keep on monitoring here is, of course, on the upside is the 179.55, and if we do get a nice pop above this level, now this is where it could become more interesting, and for the bulls, of course, and we could see this one traveling further up here towards a retest of the highs that we saw here in the first days of January, and that was around the 181.90 level. So keep your eyes on that one. So basically, a nice good pop above this 179.55 could increase the chances of this one traveling further up. But on the downside, well, this is the level that I was talking about, the 177.30. This is the one that we're going to keep a close eye on. A nice good drop below that could send this pair towards the next potential area of support around the 175.55, which was marked here by the lows of the 19th of December and also by the highs of the 12th of December as well. So keep your eyes on that one. But again, for now, judging by this, you can see that it's a bit of a tricky one. You can see all the lines, all the EMAs here squeezing here into one bit here. So it's in a way it's trying to figure out which direction it wants to continue traveling. So that's why it's a bit of a tricky one. But at the same time, could provide some good trading opportunities later on, especially if we're going to get a nice break either through the upper side of here, through the 179.55, or through the a drop below the 177.30 level. And the last pair I wanted to quickly touch on, and that's USDJPY. Now with this one, Now, I was talking about this one yesterday, and I was telling you guys to keep a close eye on this one. We do have this downside resistance line running here from the highs of December. Should I say probably actually the 14th of December to be more precise. So. And actually, let me just jump back into the 4-hour chart on this one. So you can see that we had a nice break of this downside resistance line. Certainly, you could in a way try it here or try to connect these points here. Probably maybe more accurate would be to draw these. But it's, of course, at the moment, of course, you could say that yes, I mean, he has broken the downside resistance line, the short-term downside resistance line, so the path kind of holds higher. But for better confirmation, to be on a safe side, keep a close eye on the 109 level. A nice good break above that, yes, could potentially open the path towards slightly higher levels. This is, of course, when we will aim for the this little high here near the 109.45. A break of which, or actually even you can in a way put it towards the 109.50. A nice good break above that could send this pair a little bit higher here. And looking at this 4-hour chart, you could keep a close eye on this 200 EMA that could get tested. If we, of course, see a nice good break above the 109 level, and the buying momentum will remain strong. So probably, like I said, we will initially aim for the 109 or the 110 level, let's put it that way, let's round it up here, or slightly above that, the 200 EMA shown here as the black line. On the downside, well, you could keep a close eye on this little area here, this 107.70 zone, approximately there. A nice, or should I say 75 to be more accurate, 107.75 level. A nice good drop below that could send this pair towards a retest of the lows that we saw here back in on the 3rd of January, and that was approximately around 106.73, 75, something like that. So yep, just about 100 pips away from this breaking point here around the 107.75. so keep your eyes on that one. For now, guys, it's better to be safe than sorry. Keep a close eye on these levels that I was talking about. A nice good break above this one, the 109 on the upside, could potentially lead towards higher levels, but on the downside, the 107.75, and I do understand it's quite a bit of a move here, quite a bit of space here, but to be honest, like I said, it's better to be safe than sorry here. So with the downside, a break below the 107.75, now this is where it could become more interesting to start examining lower levels. Okay, guys, I hope you found it useful, and thank you very much for watching and listening. And if you want to join me later on in my Trader's Tea Time, and that's 14:15 GMT time. But for now, I hope you have a fantastic trading day, and just to kind of remind you guys, be very careful with the pound, trading the pound today, because we do have the UK Parliament vote later on in the evening around the 7 o'clock GMT, or 1900 GMT time, so approximately then. Yeah, but like I said, keep safe, and be very careful, and don't forget to have your stop loss in place. Have a nice day, guys. Bye bye.